Good morning, welcome to the market view for Friday the 30th of May 2014. Starting off with the 30-minute chart for the GBP USD for yesterday. The market trading in a very narrow range indeed. In fact, if we go from the low up to this high, you will see we have only a 50 pip range. So a very quiet day for the British pound yesterday. You can see the buy signal there. It was filled as prices came back down to just below 168, if I recall. 167, finding support and then moving back to the upside and then running out of steam. The market then trading sideways and eventually coming back up towards the entry price, but of course this will have already been stopped out with a 14 pip loss around this area here, because we had a red bar going through the entry price, or coming back through the entry price. They want to reduce the loss there. So 167.13 the entry price, 167.35 there, so 18 pip loss on the trade yesterday. Very boring and sideways day, and again this is reflected in the daily chart. And what's quite galling about it, I suppose, is we had two great days this week, 1780 pips, and then yesterday just stuck in this sideways range as the market found support at the 167 level. You can see prices starting to move back up at the moment, so let's just have a look and see what we can do as far as working out some targets should the market move higher. As far as the downside is concerned, we'll just cover that. 167 psychological area, 166.96, which came off this rolling fib that we drew in yesterday as well. So on the upside, let's just have a look, see what we've got. The first high to the left of the chart, this is the first low to the left of the chart, so I'm going to go from the high to the low, and that gives us a couple of areas of where we could expect some resistance should prices start to move higher. Of course, we've got the 168 at this level, and then 167.50 here as well in between. So they would be my first port of calls, as it were, and also just watch for the high on this one here as well at 167.40. So watch out for that too. On the news front this morning, we've got all medium impact news items all the way through. There is nothing from Europe this morning. It's all US from 1:30. Core price index, personal spending, Chicago PMI, revised UOM consumer sentiment, and then Plosser is going to speak later on this evening. So a bit of a quiet day possibly for the GBP USD today, so just keep this in mind. So I wouldn't expect too much, but of course now I've said that, the market will probably explode, so no doubt Murphy's Law having a hand in the markets today. There's nothing really that economically could move the market, so but you just don't know. I mean, the day before, which was Wednesday, there wasn't really any news out until late on, and yet the market moved 80 plus points. So you just never know. But if you were to take the news items for moving the markets, then really it should be a fairly quiet day, and it's Friday as well. So just keep that in mind. Just before we conclude, quick look at the volatility for the Dow. If you've not seen the video yet, go and check it out, otherwise this will mean absolutely nothing to you. We've still got a low in the implied, 23rd of May, a week ago today. The blue line, which is the historical volatility, is moving lower, and of course you can see what happened when we got to these lows with the blue line. On the previous occasions we had a correction in the market where the implied volatility spiked, so this is good news. I'd like to see the implied actually break this historic low for this market. That would be good, but at the moment I'm expecting the Dow to continue to the upside. 16,000 whatever it was that we were at yesterday. Let's just see if we can get a figure on that. Right, I've just found a chart for you. You can see that yesterday we're up 65 points at 6,698. I would expect this market to head towards 17,000 before we possibly get a correction to put in an all-time high at a whole number. So it's a case of waiting to see what happens. We're heading back to the high where we had a bit of a correction a few weeks ago, so we'll obviously resistance, at this level, which is 16,735.5. That needs to be taken out first, and then on towards the 17,000, which is not too far away. It's only 300 points, and I've seen the down move over 500 points in a day, or 300 points is no real problem, or 150 over 2 days. So it may seem like a long way away, but in reality for the Dow, it's not. So that would be my thinking at the moment. I can't see them dropping the market just yet, and hopefully they'll move it towards the 17,000, suck in a lot more people, and then drop the market. And talking of which, actually, let me just find you something else. I'll be back in just a second. Right, here's an article I found the other week from zerohedge.com, and it was asset managers hold most cash in 2 years in the least believed bull market ever. And what's interesting about this article is not necessarily the Dow charts, but it's when you get to the bottom and you look at this data from Merrill Lynch, which is the institutions buying, net buyers over a 4-week average. You can see that they're busy actually selling, and private clients are buying like crazy, not actually selling. And this is indicative of a market top as well, that the general public tend to come in and have sold all of the stocks at the highs, and once the distribution phase is over, as it's known, then the institutions can move prices lower and then buy them back cheaper and then get the profits back again as they move the market higher thereafter. It's cyclical, that's how it's worked. It's always been this way. But this chart is absolutely brilliant. So I'm looking for the raw data so we can sort of keep this up to date as well. But at the moment, I haven't been able to find it. But the source, as it states there, is the Bank of America and Merrill Lynch. So, but a fascinating picture there indeed. Right, well, that's it for today and for this week. I will see you on Monday morning, all things being equal. Have a great weekend. As ever, thank you for your support and also for watching.